A high-flying surprise for analysts today, with Virgin Australia announcing a troika of deals to raise the stakes in its attack on Qantas's traditional markets. Subject to regulatory approvals, it's announced a takeover of regional airline Skywest, taking on Qantas Link. It will take a 60% holding of Singapore Airlines-owned low-cost carrier Tigerair Airways up against Jetstar, and Singapore Airlines will also take a 10% stake in Virgin Australia. Well, I spoke with CEO John Borghetti just after the announcement. John Borghetti, thank you for joining me.
Hi Tiki, nice to see you again.
You say this is but a step in your 5-year transition. This time results next year. What do you see Virgin Australia looking like?
Well, a lot bigger than we are now, obviously, if these transactions are approved. And, you know, I did say that it is a step in the 5-year strategy because it is. I mean, it's an important step, a very large step. But it isn't the whole strategy, as you know. I mean, we started 2.5 years ago with repositioning the business, actively targeting high-yielding business. But, of course, we vacated the budget space and, frankly, had very little presence, if any, in regional Australia. Whilst we've been going very hard at the business end and what I would call the high and middle end leisure, we really don't have a presence to speak of in any other sector, and this allows us to have that presence.
Well, let's unpack this. Skywest first. Presumably a big attraction in the West is the charter market, the fly-in, fly-out market.
That's exactly right, and we have virtually none of it. I mean, we don't operate a charter operation. We will if this is approved. I mean, I assume if you're attacking it, as you are, Qantas at the business end, this must be, at the moment, one of the most lucrative areas for Qantas. Well, I can't comment for them, but it certainly would be a very lucrative area for us because, you see, when you look at the last decade or so, Western Australia effectively, more than probably any other state in this country, has had the effect of Ansett collapse. In regards to competition. I mean, Western Australia was a very strong foothold for Ansett, and of course since Ansett's demise, the market has been, I'd say, occupied to a large extent by one player.
You say your synergies with Skywest are going to work through over the next 12 months. You're keeping the management team in place. That would seem counter to good synergy.
No, what we said was that what we would do is keep it operating under the AOC, which is the Airline Operating Certificate, that has all those fleet types attached to it, and that we'll keep head office in Brisbane. But our plan is to actually expand the business and therefore create jobs and create more air routes, etc., not contract it. You know, in terms of the synergies that we get from the business, a lot of them come from fleet as well as cost savings and other means. So it isn't about people. In fact, people, as you add more aircraft, you need more people, and we'll be adding more aircraft, so we'll need more people.
Moving to Tiger, how long do you think it will be before Tiger will break even?
Well, I'm not going to comment on that other than to say that let's wait for the approvals if they come through, and I'm hopeful that they will come through because we think we can deliver some good growth potential for Tiger. But, you know, when you look at Tiger for the last 12 months, and I think this morning they announced the last quarter losses, you have to remember that some of those losses were due to the grounding effect that they had. But clearly they need scale. And we can deliver that scale. We can help with our expertise and frankly have Tiger operating to many more ports and bringing tourism into those ports that currently really has a limited way of getting there.
Last year, CASA grounded Tiger, the Australian fleet, because it, quote, lost confidence in the airline's ability to manage its safety. Now, a couple of weeks ago, Tiger was also still spamming customers. I mean, its reputation is nothing like what you would want at the moment. Are you going to have some major input there?
Well, certainly, you know, the brand would have been hurt by what went on, but it certainly hasn't been irreparably damaged. It is still a very strong brand in Asia, and it's still recognised in Australia. And I think that the brand equity can go back very quickly, and we believe that we can bring that expertise. I mean, if you look at where we are now with our branding, I think we've made quantum steps in the last 18 months with it, and we believe that that the same thing can happen with Tiger. And you know, I wouldn't want it any other way. I want the Tiger brand because it has got a lot of value that we can extract from it.
And you've stressed today that it's going to remain has the Tiger brand and quite distinct from the Virgin Australia brand, the brand that you worked so hard at to get sort of more upmarket.
And Tiki, that's very important because what you don't want to do is create confusion in the eyes of the consumer where they think they're booking one carrier and they wind up on another. You know, what you won't see with Tiger and Virgin Australia is Virgin Australia code-sharing on Tiger or Tiger code-sharing on Virgin Australia, because the principle of those airlines and those brands are very different to different market segments, and it's the market segments that you're targeting that dictate the brand that you use and the expectations you deliver.
Would you say that that's happening to some extent with Qantas and Jetstar at the moment?
Well, I suppose I'll talk more generally and say not every airline does that. And you know, we've learnt, and certainly I've had my experience in multiple brands, and I think we've learned from other people's experience, and as you do, as you evolve, and we're going to put all those learnings into practice.
John, these deals essentially take us back to a duopoly in Australia. How are you going to convince the ACCC that this is good for competition?
Well, I'm not sure about that. I think that we have to remember that, first of all, the way it is at the moment, we're not in any charter business segment. We're very limited in the FIFO business, in the fly-in fly-out business. We have very limited presence in Western Australia. We have virtually no presence at all in the budget space. In fact, I would argue we don't. And so my argument here is that the counterfactual is that if we can't do this, then you know, I'd like to understand what is then the consequences for Tiger's growth potential going forward, given that 5 years down the track from operating, they only have 11 aircraft, and we're saying with our involvement we can grow that to 35 in the next 5 years. And look at Western Australia. Skywest is as good an airline as it is, and it's a brilliant airline. It is a very small airline in the total scheme of things. So the growth prospects for that airline too, I think, I would argue, are limited in comparison to what we can bring to it. So I think you have to look at the counterfactual as well.
The other part of this deal is Singapore Airlines taking a 10% stake in you. Now, that's interesting for the Virgin Group as a whole, because, of course, Singapore owns, I think, 49% of Virgin Atlantic. To what extent was Sir Richard Branson involved in all of this?
Oh, that's an interesting question. No, not at all. I mean, this is Richard is an investor in Virgin Australia, and a very good investor, may I say, shareholder. But no, this is a separate transaction, and no, none.
You talked today about the chemistry that Singapore Airlines had with Virgin in terms of a sort of a management team with the same mindset. Perhaps that gives us some indication as to why Temasek had so much difficulty trying to get Singapore Airlines to talk to Qantas. Were you already talking to Singapore at that stage?
No, look, I don't know. We've been talking to Singapore Airlines since I joined this business. You know, we came to an understanding on the license, on the branding, on our alliance. So we've got a very good relationship with Singapore Airlines. And, you know, chemistry is important, though, and you raised a very good point. And alliances, unless you have that chemistry, it just doesn't, you know, they're not enduring.
But this is more than an alliance, isn't it? This is something you can't just break up. This is actually a shareholding.
Well, that's important. And if back to that point, if you have good relationships, then you have more confidence. I think what this is really a vote of confidence by Singapore Airlines, by any measure, one of the world's best airlines, by any measure. In fact, we're honoured to have 3 of the world's best airlines on our register now. A vote of confidence in our strategy, and that's a huge compliment to our management team, to our staff, importantly, and to our strategy. So we're very happy with that.
Another one of the world's best airlines, Emirates, looks like it might be teaming up now with Qantas. Now, I'm curious about this because it would seem to shift the hub for Qantas to the Middle East and Europe. What does that mean for the battle for the Asian dollar?
Well, I'm not going to comment on Qantas and what it means for them, but in terms of the Asian dollar part of the other question, obviously you're going to see us grow more and more in Asia, whether it's with alliances or partnerships or our own by our own aircraft. Asia is a very important part, and what is interesting here is, and you know, we read in the papers over the last 2 days, 3 days, of those very important comments from the government about you know, the Asia century, etc. Well, this is it in real life. I mean, we have proposed to buy a Singapore listed company, which is Skywest, and we have proposed to form a joint venture with an Asian you know, shareholder. and an Asian shareholder or an Asian company has decided to invest in us. Now, the consequences of all of this is not only is it good for competition in the country if it gets through, in our view, but it is very importantly good for the economy and the job creation, the tourism potential, and this is a classic example of Australia and Asia actually working together and benefiting both ends of the route, but in our case, Australia.
Finally, just back to the domestic market, your war with Qantas for the business customer, really cheap business class tickets now. Are you deliberately undercutting Qantas, and how long can you go on?
Well, firstly, it's not a war. You heard me say this before. I call it competition, and competition is good. In fact, every time Virgin has entered a market, any market segment, we've always lowered fares by around 20 to 30%. The business market is no different. And what you're seeing is a pricing that we believe is appropriate for our cost base and for the value that we provide to the customer. The pricing in business class and the business market has been so high for the last decade because of lack of competition. And when competition comes in, prices always go down.
Finally, the romance is back, apparently, at Virgin Australia. You're heroing your people. To what extent is this a strategic play and hitting Qantas where it hurts at the moment because of their difficulties with the union and staff?
It's got nothing to do with that. People that know me will tell you. I've always believed that the people are what makes the companies different. It's not the colour of the aeroplane. It's not the way that you fly them. I mean, you all fly them safely. It's the people. I mean, it's the people of Virgin Australia that have made it what it is. All I do is set the direction, and so what you're seeing is actually my true feelings through an advertisement.
John Borghetti, I wish you very good luck with all your deals.
Thank you, Tiki. Always a pleasure to talk to you. Thank you.